reported a drop in its full-year output, 25% down, said total coal sales, as I was saying, down to 2.5 million tonnes. Coal of Africa Executive Chairman David Brown joining me at the desk to take a look at the way forward for the company. Thanks for joining us today, David. So I've got to read some of the numbers because they aren't pretty to look at when it comes to this period. I mean, $148 million loss, that on the back of revenues were just $145 million during the period. And that gross loss over there, $761 million. I mean, that's a scary number to look at, just to, kind of taking cost of sales into account. So what went wrong when it comes to either expenses or the revenue line?
Yeah, I think, good evening. I think from a perspective of coal, I mean, quite clearly there was commercial pricing considerations that obviously impacted on. We had thermal coal down roughly 21%. We had met coal down about 35%. So as you can see, a marked impact in terms of on the revenue basket received. I think for coal as well, there were production issues. Effectively, one of the more profitable collieries we had, which was the Vuna colliery, came to the end of its life in March of this year. So we missed out about 3 months of production from that colliery. And in essence, we also had some force majeure issues around delivery through the Maputo corridor in Mozambique, where there was rail closure for a number of months, and that also impacted in terms of delivery to the market. But I think from our point of view, I mean, quite clearly the loss of $148 million, I think is the end of that period, and we're entering a new phase now.
So we're going to talk about that. I mean, everyone's questioning right now the ability of Coal of Africa to be a going concern on the back of the fact that if you just look at cash generated from operations, you're in a negative position over this period. So what are you going to do to keep the company moving forward? I mean, where do you see growth coming through from?
Well, I think there's the three issues. I mean, quite clearly it's a company that has had significant legacy issues, and I think I've been on your show before talking about some of those legacy issues. The first element is obviously to reduce the cash burn, and effectively we've entered a Section 189 process over Mooiplaats. And effectively we've concluded that process today with the CCMA. We've got a meeting, facilitated meeting with the DMR and the unions next week to see if there are any viable alternatives for that colliery.
As opposed to going on care and maintenance, which
exactly. If we're not successful, we'll place that on the care and maintenance basis. That in itself will trim losses quite significantly from probably close to 250 million rand a year down to probably 40 million rand a year on the care and maintenance basis. Valet colliery, effectively the board approved our plan on Wednesday to look at an expansion on that. So we'll be putting that mine on the construction phase from about
How much is that going to cost? I mean, because you've had so many issues with the people of Mapungubwe, there's been issues with the mining license in that place. So talk to us about development of that, as you call it, a development asset still.
Well, I think from that point of view, I mean, quite clearly a lot of those issues are legacy and historical issues. We have an effective EMC now, which is Environmental Management Committee, a forum which effectively puts all the parties together. So we have a forum through which we can debate and discuss those issues. We are fully compliant with all our requirements, and in fact are trying to continue to lift the bar to actually comply with higher and higher standards. So that is not an issue from my perspective. The issue really is about the fact that effectively what we need to do is do some plant modifications so we can actually get up to the right tonnage that we need to produce there, produce the right product suite that we believe that we can produce from that colliery, and put that on as a profitable colliery going forward. So that's the plan of action on that. But just to come back to your first point about, there have been obviously issues and questions around the liquidity of coal, but we've made some quite major breakthroughs in the last couple of months. We've kind of normalized banking relationships with banks. We have a credit approved term sheet received from a South African banking institution for a 200 million rand 18-month facility. We're in the process of, we've identified the split between all the core assets, the non-core assets. We are selling off the non-core assets. We believe that will bring a substantial amount of money to the balance sheet as well. That, coupled with a short-term bridging facility, will enable us to have sufficient cash resources over the next couple of years. Now, bearing in mind that's at a corporate level. As I said, we need to raise some funding. It's going to cost about 220 million rand in terms of capital for Valet, and we're going to look at that on a ring-fence basis, enclosed in the project company itself.
220 million rand to develop Valet, as you see, and that of course is the growth area right now, one of the growth areas.
One of them, yeah.
So where do you see yourself being able to raise that funding? Would it be through debt? Would it be through equity, offshore, onshore?
That'll be onshore and it'll be debt market. We've looked at the project economics, and even in the current climate commodity pricing environment, it's a very robust project and certainly will carry the project funding.
Mercado, tell us about that. Feasibility studies completed there. What could this ultimately mean to coal?
Well, essentially the company needs to be in a position to obviously get through to those points of being able to develop those projects. But the Mercado project effectively is a 16-year life of mine. Its real key features is going to be a premium hard coking coal product, which obviously trades at a premium to your thermal coal prices. Essentially from that perspective, we believe it could deliver in the order of $600 to $700 million NPV to the group, and essentially will cost us around about $400 million. Now, obviously, quite clearly for a company of our size to raise $400 million is going to be a trick ahead of us, but quite clearly from our point of view, we're going to be looking at black economic empowerment funding in terms of taking up a percentage of the project, including obviously our communities. At the same time, we're going to be looking at a stake of introducing a strategic investor, equity investor at the project level, and then debt to fund the balance. And certainly, again, looking at the project economics, looking at the long-term pricing environment, we believe that it's a very doable case.
When it comes to those assets which are being held for sale right now, and Mooiplaats essentially does fit into that, but the question is still with the DMR. I mean, what is the environment like to be selling these assets? Are there buyers out there? What type of prices are you looking at for them?
Look, I can't say there's a plethora of buyers out there, absolutely not. And each asset sale is a hardship in itself. For instance, Woesterleen, we've concluded a sale agreement for 80 million rand, and I probably put in more work in an 80 million rand sale as opposed to a billion rand sale. So without a doubt, the environment is tricky and difficult. But I think with the right packaging on the assets, I believe that we can sell all those assets.
Let's get to the new board that you ultimately, a new executive team that you have, because there have been so many changes. I mean, John Waddington not renewing his contract. Are you going to be bringing on a new CEO? You've got a new CFO who's recently been announced, along with a lot of other changes. So tell us about the changes when it comes to the executive team.
Well, in essence, the group needed, I think, a fresh start. I mean, quite clearly there were a lot of legacy issues that needed to be cleaned up. We needed a new exco with a new drive, and certainly the team that we brought on, I think, is experienced, but also has got the youth that and the energy that's needed in order to deliver and execute against our strategic plan. As far as my position is concerned, I've said that I'm on board to steer the company through the tricky period that we're in. We've made excellent progress in the last 4 months. I'm really been pleased with how we've done. I believe certainly by the first quarter of 2014, we'll effectively be right on the right track.
So what happens essentially with John Waddington, because he's still got a lot of shares in the company? Just look at the balance sheet, 310,000 ordinary shares. Is he going to stay on as a majority shareholder, even though it seems that, I mean, are relations strained right now?
No, not at all. I mean, quite clearly, John and I and the board had a conversation about whether he wanted to commit to another 3 or 4 year period, and he said that he had actually enjoyed his 3 years, but enough was enough. And certainly I think he was looking for a fresh challenge. I think the board was looking for someone to take the company through this very difficult period. I believe I have an element of expertise that has helped it guide it through this period. In terms of majority shareholder, we've got 1 billion shares in issue.
Okay, so
300,000.
Majority was probably not the right word to use there, but yes, he is a shareholder essentially.
And as I say, there's no issues. No.
Thank you for joining us today.